Today I'm going to be talking about the 2023 housing report from Redfin. Everyone is starting to make their predictions as far as where do they see the market going next year and what can you expect, especially if you've been on the sidelines hoping and waiting maybe for the right opportunity to purchase a home. This may be your time, so get ready and make sure to stay to the very end. If you're still on the sidelines, not sure if you're ready to buy a house, I've got something special for you that will help you understand the buying process so that way you can make the best decision for yourself. My name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Whether you're a first-time home buyer or a seasoned investor, my team and I are here to help you cross that finish line into home ownership. And if you ever have any questions, you can always send me an email regarding your purchase, refinance, or if you just need a second opinion with what you're doing. That's what my team and I are here for, and we can help you anywhere across the country. Now, the first prediction that Redfin is making is that they see home sales will fall to their lowest level since 2011 with a slow recovery in the second half of 2023. The biggest challenges buyers are going to have next year is, of course, affordability and higher interest rates. Again, all of these comparisons, they're always comparing 2021 when we had record lows. So of course, rates are going to be higher. Home prices, inflation, and a potential recession. But remember, I've shared this before and I'll share it again. During a recession, housing prices tend to go up. And during a recession, mortgage rates tend to fall. So if we do head into a recession, which I think we will, I think we've already been in one, just depends on what side of the bed the government wakes up on and what they want to define as a recession. But if that happens, and I think we will have it, it's probably one of the most anticipated recessions we've ever had. It's probably going to favor the real estate market, which means, again, if you're on the sidelines, you got to get ready now, because you might miss the boat. So if we do head into a recession, I agree with this prediction. I think rates are going to come down. We're already starting to see mortgage rates come down as we see CPI get a little bit better every single month. And I think, again, with the data that we've looked at over the last 50 years, if we head into a recession, home prices should start to increase. And that all makes sense because if interest rates go down, buyers will come off the sidelines. They're going to start bidding up properties, and it's only going to drive home prices right back up. So prediction number one, I totally agree with. Prediction number two, mortgage rates will decline, ending the year below 6%. We expect the 30-year fixed mortgage rates to gradually decline to around 5.8% by the end of the year, with the average 2023 homebuyer rate sitting at about 6.1%. Again, this follows just in line with what we talked about in prediction number one. If we see a recession, I think rates will get better, and also the CPI number, the trailing 12 months are continuing to get better. It's favoring us right now. So this is also something that could fall in line. Now, again, crazy things can happen next year, which we've all seen that over the last couple of years. But assuming things continue to move at the pace that they've been moving at, I think that rates are going to come down. And if we can see rates in the low sixes, maybe even the high fives, that would be a huge relief as far as buying power goes for so many of you that have been waiting. And also all of you that have purchased homes. You will then refinance to then save yourself a ton of money on your mortgage as well. Prediction number three, home prices will post their first year-over-year decline in a decade, but the U.S. will avoid a wave of foreclosures. Again, you got to read this with a grain of salt. Of course, we have a decline because the last 10 years, it's just been insane to be a homeowner. Prices and values have just been continuing to rise year over year. In the last several years, we had double-digit increases. So of course, this thing has got to come to a slowdown, which we've already been seeing. So this I'm not surprised at. And the whole foreclosure piece, I also agree with too, because many homeowners out there either do not have a mortgage on their property or they have a very, very low loan to value on their house because they have an insane amount of equity in their property. So let's just say you did get in a pinch and you couldn't pay your mortgage. Worst comes to worst, you either get a forbearance from the lender, which they've offered that during COVID. So maybe you go a few months without making a mortgage payment, see if you get back on your feet. Maybe you do a loan modification, which were super popular during the foreclosure days. Or worst comes to worst, you sell your house. So this whole wave of properties that are just going to come on the market and we're going to see all this inventory, I don't see where that's going to happen. Builders have slowed down their permits. And for all of us that are current homeowners, we probably refinanced or maybe we bought during the last couple of years. So we have really low interest rates. So there's no incentive for me to sell my house today. So again, that whole wave of properties that people are potentially expecting to hit the market, I just don't agree with that, and I don't see where that's going to happen. So this is another stat from Redfin that I would agree with. The Midwest and the Northeast will hold up best as overall market cools. So again, most of these headlines that we read every single day when it comes to the housing market, they're all national news. So it's not necessarily every single part of the country is going to see a decline. Some places might plateau. Some places might actually do a little bit better. But you can see here on this list, you got 10 housing markets across the country. Again, mostly in the Midwest or Northeast that are actually favored to do pretty good next year as well. So it's not all doom and gloom. So make sure you also talk to a local real estate agent if you're thinking of selling or buying, because you want to make sure that you are getting local data so that way you can make the best decision and you're not going to base it on some national article like this or like Zillow or anyone else that's putting out data right now. Prediction number 5, rents will fall and many Gen Zers and young millennials will continue renting indefinitely. This is one thing that has been a problem because so many of Gen Zers and millennials went to college. They got a ton of college student loan debt, which doesn't help them qualify. And if they can't get jobs that are high paying, trying to buy a house could be a little difficult. And especially if we're heading into a recession and you're starting to see some of these tech companies with their massive layoffs, like we see Facebook or Meta lay off 11,000 employees. Most of them probably were making good money, probably got a college education, probably got some student loan debt. Now, if you can't get a job that's paying you 6 figures, it's going to be really hard to knock off that student debt, let alone try to buy a house. You're probably going to move back home with your parents until you probably get things back in order again. So again, if single family home prices are continuing to rise, maybe plateauing, Gen Zers, millennials, going to be a lot harder to be able to purchase. So of course, what else can you look for? You're either going to look for a condo, or maybe you're looking at in some parts of the country, multi-units. So duplexes, triplexes, fourplexes might be another way for you to get your foot in the door into a house. But you may not be able to afford a single family home on your own. Prediction number 6, this also piggybacks off of the last prediction as far as multi-units go. So they're now saying that builders will focus on multi-family rentals. There's also been some talks and some news articles that have come out that Chase and some of these other large banks or private hedge funds have been investing more and more into residential real estate. Some of it's going towards single family. Some of it is now being predicted that builders are going to start looking at multi-units. This, again, might be something that will be more prevalent if the cost to build a single family home and maybe the cost of trying to sell a single family home becomes more out of reach for more people. You've got to find other ways to then either build to rent or build to then have some of these other investors come in and buy some of these units up. I know a lot of builders that were sitting on inventory, were selling them in bulk to big investors. And these investors are just going to rent the homes out. And you're starting to hear more and more about these build to rent, where builders are coming out there and they'll never sell these properties. They're going literally to hedge funds and Wall Street guys, and that's where they'll live. And maybe they'll create a REIT or they'll have other funds available that it's literally turning that property into a rental forever. And even the retail investor like myself, or maybe even you might be an investor as well, will never be able to get that opportunity to buy that house because it's off the market and it's being traded on the secondary markets. And unfortunately, that is still less inventory out there that we have the ability to purchase, which supply and demand is going to control home prices going forward. Prediction number 7. Investor activity will bottom out in the spring, then rebound. Real estate investors will purchase about 25% fewer homes than a year earlier, of course, because why? Rates were cheaper and you could cash flow significantly more on your properties. So there was just a lot more benefits to, again, where the market was. So I'm not surprised that investors are on the sidelines. Unless you're doing a 1031 exchange and you have to move some money around, most investors are probably being really cautious about what they are buying. I know for myself, I'm still looking at properties, but I haven't purchased a rental at all this year. All the rentals were purchased last year, and I've got sub 3% interest rates on all of them, and they're all cash flowing. Now, could I still find a deal today? Yes, but it's going to take a lot more money to put down in order for the home to cash flow. Because my number one focus is if I can get the home to cash flow, I could care less if the market goes up or down. My tenant will sustain the payment. I'll make a little bit of money so I can ride the storm out a lot longer versus buying the home for pure appreciation or speculation that maybe in a year or two from now, it's going to be worth a couple $100,000 more than what I paid for the home. I'd rather take the cash flow and leave that home for my daughter. So when she gets older, she has a ton of passive income coming in and she will put herself in a really good position. Prediction number 8, Gen Zers will seek jobs and apartments in relatively affordable mid-tier cities. Again, if you can't afford to live in New York, Boston, LA, Seattle, you're going to look to move into the second tier type cities, maybe like a Spokane, Washington, a Boise, Idaho, some of these other places where the cost of living is a little cheaper, your housing's a little cheaper, or you look for places like Nevada, Florida, Texas, where you have no state income tax, which also helps those of you that are trying to stretch your dollar as far as you can. I've had a lot of clients recently that watch my channel that are looking to relocate because they're retired and they realize that they have to figure out ways to stretch their dollar as much as possible without having to go back to work, find a part-time job, or dip further into their savings, which is then going to cause them more stress and headaches on trying to figure out and navigate their retirement. The next prediction states that more cities will follow the example that Minneapolis is setting to curb housing expenses. And essentially what they're doing is they're eliminating single family only zoning. So what does that mean? That means that they want more duplexes, triplexes, and fourplexes to be built so that way it's more affordable for people to then reside in those units. So that's kind of interesting because I've heard a lot more about this, and especially in the California markets where they have those ADUs or the additional dwelling units. In Hawaii, we also have those quite a bit as well, and you have multiple families living in one property. So if the cost of living continues to go up, people are going to find ways, families are going to find ways to mitigate their costs, whether it's, again, maybe your son or daughter moving back into the home, paying for some of the rent, paying for some of the mortgage, or you're looking for some of these other options where you can own a multi-unit property and maybe your tenants are taking care of the bulk of your costs in order to live. Redfin did mention the multi-unit thing several times. So I think that's going to be something that's going to come up a little more. That's actually a really good way to buy your first rental property. If you can qualify for FHA or VA financing and you're going to live in one of the units, rent the other units out. That's a great way to house hack your way to financial freedom. So some of these things that Redfin had mentioned, I think it's going to be really interesting how things play out in 2023. I think we know the recession's coming. I think we know that interest rates are going to come down. And I think that as those things start to happen, the real estate market will slowly start to recover. Hopefully during the springtime, just like every spring, things get better and you have more buyers out there and interest rates are a little more comfortable for most of you to qualify at. And I think all this will be in the rear view mirror and we'll all say, thank God we made it through this crazy housing market and things will get back to normal. Share this with a friend that's maybe on the sidelines, or if you need a second opinion with your financing, you don't know where to start, send me an email. Thanks so much for watching and I'll see you on the next one.